Well, today was a repeat of yesterday. It ended up being a repeat of yesterday, although slightly weaker as it turns out. But there's some other stuff to talk about today too, so I'll cover all of it briefly. Market again plunged hard this morning, well below zero, and then they spent the afternoon trying to drag it slowly back up again. This time they never did quite make it to zero. In the end, the market was down almost as much as it was yesterday, but effectively that entire drop happened in the last few minutes of the day because they did manage to get it from way below that back up almost to zero over the course of the day. But the point is it's still showing major weakness, okay, because normally the market at least goes up for a couple of hours coming out of a long weekend, as I noted yesterday, and often it even goes up for a couple of days afterwards, even if the overall market tenor is down. That did not happen this time at all, not even close. They are basically just hanging on for dear life this time around, okay? So we'll see how that continues as time goes on here over the next few days. But I will also say that with regard to the European markets, I mean, Italy and Spain, as usual, being the weakest major ones, went down pretty hard today on a day when all the European markets were down in the end overall. This is not unusual. But I'll again use the German market as a reference point. It got dragged down hard again at the end of its day, when during the beginning of the American day, where, as I noted a moment ago, the American market went down hard at the beginning of its day today. That dragged the German market down with it. The German market had been well above zero again, trying to get back up there again to the previous recent highs and trying to hold it there. They got pulled right out of that again at the end of the day today, and ended up plunging to right below zero again, to a fair amount below zero at near the end of the day yet, by the time the day was done. So the overall market in Europe is not doing real well either, but probably more important to the bigger picture, and that is why I want to do this video today, not a very long one. I'm just going to mention this stuff because it pretty much speaks for itself, I think, is that crypto is back down again too. As I noted before, it had come back up again in an attempt to stabilize above Bitcoin 30,000. Came right back down again. It's right back down there again. More importantly than that, in my opinion, I had noted that interest rates were coming down pretty hard in the meantime, and that there are two situations where interest rates moves are not particularly good for the economy. That is to say, when they're going up relentlessly, which is what they were doing before for quite a while, and when they're going down a lot quickly, which is what they've been doing since they peaked out in well above 3% on the 10-year note some days ago. The problem is that in the meantime now, interest rates are rapidly going back up again. In other words, this fast down blast that I've been talking about, that's been happening for a few days now, hasn't lasted. Now it's coming back up again quickly. It's up close to 3% again on the interest rate I just mentioned. That's kind of a double whammy from both directions, so to speak. It's kind of a double negative, okay? It means that the economy, from the interest rate point of view, from the bonds point of view, is not strong enough to keep interest rates going up consistently. But on the other hand, they're going back up again and rapidly, okay? So that is not a good sign at all, okay? That does not help at all. On top of that, well, I should mention, first of all, the headlines were that part of the reason why is, I mean, as if they hadn't figured this out already, is kind of what I'm thinking about here. The Fed had been saying they intend to do multiple half-point interest rate increases in coming times, near term, in all likelihood. given that we're already in June and we were in late May, and the meetings only happen every 6 weeks, that kind of implied that we might have another half-point increase in September, okay? But apparently the market is only now catching on to the idea that we might have another increase like that in September, and they're saying, ouch, okay? Well, yeah, it would be ouch, but that was kind of in the cards already anyway, wasn't it, from the way they were speaking? But the market is apparently only catching on to that now. Not exactly unusual, but it is the way it is. Anyway, the other thing I wanted to mention quickly is that now that, follow through on, I should say, is now that Europe has decided on embargoing most of Russian oil, okay, that means the oil market is assuming on the basis of that there is going to be a shortage of oil relative to a worldwide basis in the not too distant future. So oil prices shot up like crazy too as a result, yesterday already actually, and over the weekend. Bearing in mind only the American markets were closed on Monday, the rest of them weren't, okay. The point I'm making here is that the oil price has stayed up today. That is not helping matters at all. In other words, it's not just a very quick temporary spike, it's lasting longer than that, and I suspect it'll last longer yet, which is not going to be helpful to the situation. My point in the big picture overall with regard to mentioning all of these things is that things are definitely continuing to pile up, as I expected they would, as I suspected they would, as I indicated they probably would, as I indicated in previous videos. I alluded to it, okay? It's actually kind of even happening faster than I thought it might, okay? So the bottom line is that the pressures continue to build, as I anticipated would be the case, and so far they're actually building quickly enough that daily videos are worthwhile for now. We'll see if that continues, okay? But for now, that's turning out to be the case. So we'll see what tomorrow and Friday bring. Again, we're coming up on Friday. Friday is always a bit of a special case. Last Friday was a particularly special case because it was a Friday going into a holiday weekend, which, as I said before, makes it a Friday on steroids, and it certainly turned out to be one. Okay, so we'll see what this Friday brings. I don't expect it to be a Friday on steroids, for sure. That's precisely part of my point. But what it will be remains to be seen. But we'll go from there. Anyway, first tomorrow, see what happens tomorrow, and go from there. I'll do videos as I see appropriate under the circumstances. This video is being made not so much because, although that's kind of important to note too, that the stock market kind of did the same thing as it did yesterday. In other words, there was no major recovery a day later either, but the other stuff I just brought up is really ultimately more important in the bigger picture, and I wanted to make sure I made note of those things, so, and made note of what the implications of them are. You know, they're not going in the right direction. So that probably will not help the stock market down the road either, down the road in the future. So we'll see what happens over the next few days and go from there.